All right, it says we're live. Welcome to the stream. I'm here with a buddy, and we're gonna be talking about GME. All right, it says I'm live. It says I have an excellent connection. This is the premiere broadcast, so we may have to be setting up some things a little bit as we go. I'm gonna tweet out that we're live, let people know so that they can join. So if you're watching this from a recording, you might just skip ahead 30 seconds or something while I get this tweet out. So I didn't save a link in my phone, so I'm gonna have to go grab that link. All right, so let's get started. What I have up on the screen is I have interactive brokers in paper trading mode here, and we're outside of market hours. So stocks aren't moving yet, futures are, and we could just briefly talk about what's happening with futures right now for anyone who's live before we really get started with some of the material that I had prepared for tonight. Briefly, I'll describe. I've got a bombshell piece of news, and we're going to go through a bunch of facts, looking at the GameStop. Let's call it a short squeeze, and I want to correlate that with some other trading activity that we were able to they were able to identify. And the reason this is important is because there are potentially a big money pool backing the GameStop rise. And so what we're hearing in the news and what we're hearing on the forums is that it's a whole bunch of Redditors each buying like 1 to 10 shares, and they're holding tight. But I'm going to propose an alternative view, and I'm going to present some facts that corroborate that view. And you can come to your own conclusions. But the good news is, if you're a GameStop shares holder, then this is probably good news for you. And I haven't seen some of this discussed anywhere. We are going to be pulling from some things that other people have looked at. And we're also going to be adding a bunch of new facts to the story that people aren't talking about yet. But I expect that to change. I think once the word gets out on this, it may things were already on track maybe for a move higher, but I think this might help people with their resolve if they're aiming to hold on to their shares. Just quick disclosure. Myself and my friend, I think, don't have any GameStop shares. I don't have any. However, we're both traders, and we do have positions in other things that may be talked about on the stream. So I'm not going to call that out every time. This is just me talking about my homework. Neither one of us is in the finance industry. We're not registered financial advisors, and so we're not giving advice to put on trades or anything like that. But the idea here is that this is for educational purpose, and it can maybe help you to make informed decisions with your own research for when it comes to trading. So we've both got probably 15 years each in experience with trading. and that's anything from swing trading to day trading, even value investing. We've dabbled or more in all of those things. So that's a little bit about us. So anyway, let's take a look at the futures market right now before we go any further, because I want what we're looking at for the rest of the night to kind of line up with what's going on. I like to have a consistent picture of things. So a lot of what I'm showing, I'm not going to show like paid services on this stream. I'm going to be showing like free resources that are out there for everyone. It doesn't mean I don't have paid services or subscription things that I use to stay informed, but that's not going to be content on this stream, because I want people to be able to take what they see here and use it for themselves without necessarily signing up for things. Now, there are some services that I like and that I may endorse, but that's we don't need to get into that right now. So I'm going to take over the window here with this is finviz.com/futures. And I'm going to be describing everything that's on the screen, so that if you want to just listen along and not watch on your screen, that you should be able to do that. So, if you're busy multitasking or something, I'm going to try and call out what we're looking at and describe it for you. Okay, so we're looking at the futures prices. It's Sunday night. We're looking on FinViz, so there's like a 15 or 20 minute delay here. And the big news tonight is with silver. So let's hop over and look at silver. I'm going to throw the chart up there. Looks like silver's up 6% right now. It looks like a breakout, but it's from a declining trend line. If you were to draw a line across all the peaks, it's breaking out from that. It is not above the high from last August yet, which was around $30 a share in silver. So that's the big thing going right now in the futures market. Quickly hopping over to gold. Gold's up a third of 1%. We'll take a look at stock indexes, and then we'll look at energy, and then so S&P futures off the lows. They were down, I think, as much as 1% tonight, but now they gapped down about 0.5%, and that's what we're seeing right now. One other thing I'm going to look at, and we're going to look at this in more detail later on, maybe closer to the end of the stream, is we're going to talk about market outlook. And one of the big factors in my market outlook view is VIX futures and the VIX products. And we'll talk about how I use that and how it might be helpful for you too. So a small gap up in VIX futures, 1%. That's not much. I think it was as high as 3% earlier. Let's look at energy. Energy pretty flat, except natural gas. Wow, up 6%. But natural gas is always much more volatile, so I don't know that that's like an abnormal move in natural gas futures. All right, so let's talk about this bombshell news that I've got. What I'm going to talk about is for when it comes to short squeezes, these happen when typically in low float stocks. This is like a widely known thing. However, there's like a niche, another niche inside of short squeezes that's less widely known. It has to do with naked shorting. So naked shorting happens when a firm sells shares that don't actually exist, and the reason they may want to do that is because if the firm goes bankrupt, then they never really have to answer for that. It's just money in their pocket. I don't know a ton about naked shorting, but I've been watching the financial markets closely since 2004. And in 2007, there was a big scandal around naked shorting in Overstock.com shares. And a lot of people that are in the markets today weren't around back then, so they don't necessarily know that. So what put me onto this theme today is a thread on Wall Street Bets. And I'm going to put this up on the screen. Here's this guy's post. The real reason Wall Street is terrified of the GME situation. And maybe some people on here watching have already read this, but I'm going to summarize it. And really, this picture right here tells the story pretty well. So it's showing the number of shares that are failed to deliver in December. And it shows that GME is a huge outlier here. There's a lot of shares. They're saying 1.787 million shares. So almost 2 million shares failed to deliver. This is a problem because the suspicion here is that hedge funds or firms have sold shares that don't exist to try to suppress the price and force GameStop into bankruptcy. And this reminded me of all the way back in 2007, the same thing was happening with Overstock.com. And I kind of forgot about it for a long time. For me, it was just a novelty situation. It wasn't really common. I don't know if the firms that were doing that had a really good reason to do it. I think maybe it's illegal. It's being hinted at in this article that there's probably an SEC issue with firms that are naked selling shares. I think they've got to find a way to settle them or make it right instead of just paper it over on the books. And if they're doing that, then it can be a legal issue. And so to try to refresh myself on this situation with Overstock from way back then, I did some searching. I did some searching on the internet, and let me try and find. I want to read to you briefly some of the stuff I was looking at where that was discussed. Just give me a moment to find the window. I've already got it open. I have a lot of windows open, actually. Maybe it's here. No. Oh, boy. So, Patrick Byrne was the CEO of Overstock.com back then. He is no longer the CEO of Overstock. In 2019, he resigned or was forced to resign. I'm not sure, but in any case, he's no longer the CEO of Overstock.com. And we're going to be talking more about Overstock.com quite a bit. So, give me 1 second. I think I just found the window. Okay. Yeah. So here's from this article in Investor's Place. Let me put this window on top now. Drag this one out. 7 things to know about the history of Overstock and Patrick Byrne. This is from August of 2019. So this is around the time where Patrick Byrne left Overstock.com. And Overstock's crusade against naked short selling in 2005. Okay, well, I said 2007, but it was going on even longer, since 2005. In February 2007, Overstock and Byrne filed a $3.5 billion lawsuit against 11 Wall Street giants, including Goldman Sachs, Morgan Stanley, Citibank, and Merrill Lynch. Byrne accused the firms of conspiring against Overstock to drive down prices. Overstock, ticker symbol OSTK, to drive down prices and engaging in mass amounts of naked short selling. Short selling without first borrowing the underlying stock. And another problem with that is you're not paying the fee rate if you didn't actually borrow the stock. We can talk about what the fee rate is in a minute, but let me finish reading this. The suit alleged that sometimes more than the total shares outstanding were subject to naked short selling, while NASDAQ data at the time indicated only about 35% of the float was sold short. I mean, this sounded outrageous to me at the time, and it still does. But when we look back at this Reddit article, and when I read this today, it reminded me so much of that. So let me see if I can find a relevant snippet in here now. There are 71 million shares of GME. So we're talking about GME now, and this is the Reddit post from, I think it was from today. Today is January 31st, 2021. There are 71 million shares of GME that have ever been issued by the company. Institutions have reported to the SEC via 13F filings that they own more than 102 million shares, including the 13% of GME stock owned by Ryan Cohen. Now, I don't know the delay/variance on these ownership numbers, but I think there's a pretty solid argument that close to 100% of GME is owned by these firms, if not more. Moreover, there are now more than 7 million people subscribed to Wall Street Bets. I know lots of people here are sitting on a few hundred shares that they bought back when it was under 50. Some of us are even holding thousands. If the average number of shares owned by each subscriber is even close to 5 to 10 shares, we have a good shot at also owning a similarly enormous amount of GME. Even if the average was just 10 shares per legit subscriber, that puts the minimum retail position at about 30 to 50% of the company. So that's interesting, but I want to go into, I'm going to tie together a few pieces of information that may indicate that there are some big whales playing in here. So let's skip ahead here now, and I want to show you some stock charts. So this is the GME stock chart, and let's zoom it out to a daily. This may appear a little small on the screen, and I'm sorry for that. Maybe I can make this bigger. Let's reduce the number of bars here. I want to look at a little bit longer of a chart than that. Okay, and then maybe let's make it wider. I'm on landscape. Is this going to be bigger? Okay, yeah, there we go. Hopefully that looks good on the screen for everybody. And if you're typing in the chat, I can't watch it right now. I'm sorry. I may try and get to the chats later. All right, so in GME, this is the period of time I want to call to your attention. This sort of like saucer looking, this is a cup and handle in technical analysis. This is one of the really strong base patterns that you hear about. And it has a fairly modest dip from a high of $5 over the course of a period of about a month. It makes a low of about 25% lower at $3.77. It bottoms, and it hooks back up to form the right side of the cup in the beginning of August at $4.76. And then we get a handle where it kind of, the price sags for another couple of weeks. And then we get really kind of this rolling slow breakout over the next 2 weeks. And the pressure builds. It had like a false start. And then some catalyst happened that popped it up right before September of 2020. And the price shot up, looks like about 40% in a week. And it kind of hops up and down from there and kind of zigzags higher over through September, October, November, and December of 2020. And so this was this was kind of moving up with the market after the reopening, the kind of soft reopening that happened. I could zoom out and show us a weekly real quick just so that we can see where it came from. So you guys can see that before the COVID shutdown, the stock was already down. GameStop had already experienced a pretty severe crash in the beginning of 2019 from $16 a share to $3 a share. And then it rallied along with the market. The market was pretty strong near the end of 2019. It rallied up to around $6 range and fell back down during the pandemic crash in March. It actually made a new low, $2.57, and that's really the ultimate low there, $2.57. Now I want to show you guys Overstock.com. Now we're looking at a weekly chart of Overstock.com. Let me get the chart settings to be the same. I think these are the same. And what you'll see here, Overstock.com had a bottom price, and it fell from a much higher level. Okay, so Overstock.com collapsed just in the February and March drop. It fell from just under $10 to a low of $2.53. Very similar to the low in GameStop. Now, this is purely coincidental. I'm not trying to attribute any kind of special power about that share price. But what I do want to call to everyone's attention is look at what Overstock.com did from the low in March. The stock went straight up from a low of $2.53 in March of 2020 to in August. Is that August? Yeah, August. Pretty much a straight line up on a weekly chart. It looks like there's one red candle, maybe two along the way, from $2.53 to $128.50. So that is a massive move. That move is like 40 times the share price, I think. I mean, we can get out a calculator and do the math, but I mean, the point is that is a huge move in a short time. And what I'm going to call out now is that Overstock.com peaked. Now let's flip to the daily chart, and I want to look at both of these stocks at around the time where Overstock peaked in August, and it's kind of drifted lower. I mean, it's fallen a lot, but at nowhere near the pace that it rose. Now, if we put the GameStop share price on here, you can see that. Let me flip back and forth on these. So GameStop started its move in August. That's kind of when it really started to, it formed its cup and handle base in June, July, and August. And from there, it started to steadily rise higher. Meanwhile, in the middle of August is where Overstock.com peaked. And so, it had a pretty sharp fall into September of 2020. It fell to a low of around, what is that, $55, $60, somewhere in there. So it fell about 50% in a sharp drop. And that was really the sharpest drop. It's kind of drifted sideways since then. It looks like maybe kind of carving a new base, but off the highs. And the reason that that's important is because this is one data point, a fact I'm showing you to correlate that, I've already shown you that both of these stocks are, they are targets by firms that are doing naked short selling. And nobody probably knows more about being on the other side of short selling than the C-suite at Overstock.com, who's been dealing with this since 2005, 2007. They filed a lawsuit that is still going. Um, so the lawsuit is, I think they have a lawsuit that's still ongoing. That was a piece of news that I read. And so if you're battling against naked short selling and you're looking around in the market and you're trying to find examples, maybe so that you have exhibits for the lawsuit that you're in, if you could point to other evidence of naked short selling, that might strengthen your case. And so in doing so, in searching the market for other instances of egregious naked short selling, perhaps they came across the scenario happening also at GameStop. And knowing the kind of squeezes that can happen because they lived through it, Overstock.com, it really bounces around. It's moving up and down all over the place. I mean, I've shown you this move of 40 times rise in a few months. I mean, this doesn't happen to most stocks. I mean, this one ran up more than almost anything after the pandemic. So the point is, say that you're in this lawsuit, but also you can trade. So maybe you trade against the short sellers. I mean, these people do have positions. And so that's something I want to get into next. We're going to look at some of the filings from insiders at Overstock.com. I want to show you, let me zoom this chart out a little bit. And now let's look at, again, so I'm trying to add in my own insights here, but I want to be clear about what's facts and what's my insights and what's my commentary. And so when I'm showing you price charts, these are facts. When I'm showing you filings, these are facts. So this is Overstock.com. We're on FinViz. When you scroll down to the bottom, there's a really cool section here. And let me make this font a little bigger to make it easier for people to see. So this is the insider trading section. And these are SEC filings that show shares traded. It's got the holdings of executives and large holders. That's disclosed here. So take a look at this. It's color coded for me. I don't know how well that's coming across on the video stream. So I'm going to call it out. There's a bunch of directors and C-suite executives that were buying Overstock shares between $2.79 on March 16th, 2020, and March 20th. There were buys in a range of $2.79 all the way up to $4.17, and it was all in a burst. So there were some options exercises in February and more option exercises in May. But the outright buying by the directors and C-suite at Overstock.com timed the market, not just the stock low, but the market low, very, very well. And the total number of shares purchased was, it looks like 300,000 or 400,000 shares total between half a dozen people or so. So to me, this is really interesting. I mean, this jumps out. And now if we look forward, where are the sales? So they're still holding a lot of these shares, it looks like, or maybe I mean, I don't see 400,000 shares worth of sells, but let's talk about some of these sales. So there's two blocks of sales through in a range of July through September. The C-suite sold shares between $75 price and $124 price. So These people bought the bottom and they sold the top almost perfectly. Phenomenal traders. And yes, they work there. But what other trading are they doing in that they don't have to disclose here? I don't know the answer to that. But these are very astute traders. There are a few other sales here. On January 26th, there are sales. And then on January 27th, there are sales. I'm calling these out because this one is these are huge sales on January 26th and January 27th. Well, guess what was happening on January 26th and January 27th? Anyone in GameStop probably has a pretty vivid memory of this. Let me zoom us in on GameStop. And January 26th, we see GameStop go from, it opened at around 90, and it ran up on that day to 140. And on January 27th, it gaps up to 354 at the open. It explodes as high as 354, and it's been in a very wide range, but pretty much flagging around that price point since then. And so where I'm going is we can look at the sales here on January 26th and 27th. These value in the millions of dollars combined. So on January 26th, Overstock director raised $3.2 million, and the chief administration officer raised $170,000. And the very next day, the chief administration officer and the director, a director, raised between the two of them $300 and something thousand. And so these are facts. What I'm calling out is that coincides with a huge push in GameStop. Now, there are other huge pushes in GameStop, to be fair. So, I mean, this could be a coincidence. But what I'm also going to suggest is that these people are they probably talk to each other. They probably also talk to Patrick Byrne. They probably also talk to a whole lot of other people who are in the business of trading and handling money. They may have financial advisors. They may have financial advisors who have clients with a lot of money. And so what we're seeing here are filings. And if they're making these moves, it may be that other people in their same social circles or their same social network are making similar moves. And so I'm not trying to suggest that $350,000 of raised money is somehow responsible for the huge move in GameStop that happened on that same day. What I am suggesting is that perhaps people in their same circle are also making moves at the same time. And, it may be that they're trading not just in Overstock, but also in GameStop, because these two stocks are probably the most, at least for my radar, these are the two main ones for when it comes to naked short selling that's ever crossed my radar. So another thing that I want to show you is, let's talk about Patrick Byrne for just a minute. This guy is fascinating. I'm not super familiar with him, but if you've been paying attention to the news, you know that he's been in Trump's inner circle recently, and I know that he's connected with Trump people too. So perhaps, maybe they also are making some similar trades. So I think we'll find Patrick Byrne in this list. If not, I found it over here in So this is on Yahoo Finance. You can see I'm on overstock.com. Let me prove it to you. I'm going to scroll to the top. Sorry, mouse is out of control. Okay, we're on overstock.com, OSTK stock, and we're going to look at insider transactions reported in the last 2 years. So I think this goes back a little further than what we were looking at on FinViz. So I'm scrolling down the list here, and I'm looking for Patrick Byrne. I hope you guys are able to see this. Here we go. So here's Patrick Byrne. I actually have to shrink the font to make it. Well, no, I don't. We may have to do something a little funny to get this to show. I don't like this form because it cuts off. I don't know why. It could be the browser I'm using. So anyway, Patrick Byrne has a sale, and this sale raised in September 18th of 2019. This sale raised $90 million, and it was for 4.7 million shares at a price range between $16.32 and $21.84. Where did this come from? It's an indirect stock gift at $0 per share. I'm guessing this is Patrick's part of his package when he left. And so what isn't clear here is how much more shares he holds. Let's look at these column names, and we'll scroll back down. Yeah, this is showing the value and the share quantity. So when I said the value was $90 million, that was accurate, and change. It doesn't show us how many he still holds here. It may be that you can find that somewhere. It may be that he no longer needs to disclose it if he doesn't work there anymore, as long as he's under some limit. I don't know about that. So let's look at some other transactions that he's had. So my point is that there's a gigantic war chest here. If Patrick Byrne had $90 million, if he was able to hang on to a lot of that through this period, let's see here. His sales were, I think, right in here, in this region. I'm looking at the price chart for Overstock.com now. I'm looking at 2019 in the range where he sold. And it was a short-term peak. This is before the stock cratered quite a bit. I said that it performed poorly in 2019. That's after Patrick Byrne left. It cratered, and then it got hammered again in early 2020. So if Patrick Byrne was sitting on that money, or perhaps had it invested maybe in something conservative, or put with a financial advisor, if Patrick Byrne went back into Overstock in a way that he did not need to file, because we didn't see any filings from him, or at least I didn't see any filings from Patrick Byrne in Overstock shares after the one I just showed you in 2019. So, however, if he was able to put a lot of that war chest into play, perhaps by putting it with a firm, and then that firm is a large shareholder rather than Patrick, I don't know. This is kind of common. If he puts it with a hedge fund, then that hedge fund may have to declare that it's a majority holder or something like that if it's managing Patrick's money or a pool or whatever. But if they were big buyers in here near this washout, and they were responsible for a lot of this rise, I imagine that if Patrick still maintained friendly relationships with the C-suite, they may have a way to come to learn about his trades or his hedge funds trades, or perhaps they're getting the same financial advice from the same people. So I'm not trying to suggest any improprietary activity from them. I don't suspect that. But what I am saying is, if Patrick Byrne had $90 million and he ran it up, I don't know, 10-fold, 20-fold, 40-fold in this Overstock.com run, then the size of the war chest that he has, or that he has access to, could very easily in my view, account for what we're seeing in GameStop. If he started switching over his activities from Overstock to GameStop in July and August, causing the drop in. So now we're. This is my insights and my commentary. I'm trying to paint a possibility of a picture that's happening here. I don't know for a fact that about people's trading activity that's not disclosed in a filing. But what I am suggesting is that there is a possibility here that some of the same people responsible for this rise in Overstock.com may also be responsible for this rise that is happening from July and August of 2019 in GameStop. And if that's the case, then the amount of money at their disposal, I don't see any reason why they couldn't keep on pushing GameStop higher if they wanted to. And so that's the facts and my commentary and my insights. I've got my friend sitting with me. I don't know if he wants to weigh in. He's really good at playing devil's advocate, so I'd love to hear his take on this. But if he doesn't have any comments at this time, then that's okay too. Okay, no comment. All right. So what I want to look at next is there's a Reddit user. Let's open a tab here and let's go over to reddit.com/u/deep fucking value. Deep fucking value is a Reddit user who has he's a superstar on Wall Street Bets because it was his analysis was early. He was one of the first guys in this forum on the scene in GameStop, and he has been posting screenshots. Let's see if I can get this screenshot bigger. Okay, great. So I hope this is big enough for everyone to see. Let's make it really big. No, I don't want to sign in to Reddit. So what I'm showing here for people who are just listening, let me describe this picture. So this is a screenshot posted. It looks like maybe a Robinhood screenshot. I don't know. I don't trade at this brokerage. I trade at Interactive Brokers. So if this is Robinhood, it might be. I don't know. But here's what he's showing. He said the title of his post is GME YOLO Month End Update January 2021. So he's showing a screenshot of his GameStop shares. He's holding 50,000 shares that he paid an average price of $14.90. These shares today are worth 16 and a quarter $1 million. He's also got a call options position. He's got 500 calls, and these are the April 2021, the $12 strike call. And he paid 20 cents for these. Now, I looked through the chart, and we're going to look at that in a minute for the April 16 call. We're going to open up this exact call, and we're going to look at the price history. And when I scroll it all the way back, I don't see it as low as 20 cents. So it must mean that he bought it before the data that I have access to shows. It's certainly possible, but I mean that price, it's I think it was out of the money at that time. So it doesn't say when he bought these, but what I am going to point out is the chart data that we're going to look at. I think it goes back to August, and he must have bought those before August. And so an insight that we can take from that as a trader is pretty cool, is that he bought those options with at least 8 months of time on them. And we can go back. Let's look at GME stock price. And I'm going to guess that he bought those in July. He may have bought these like at the exact low. Let's see. Maybe he bought them at the same time as the shares. Let's see if we can see what was his share price. I know I just said it, but average price of his shares was $14.89. So it could be that he bought options and then exercised them to get these shares, because these are $12 calls. And so if GameStop went above $12, if he bought these deep out of the money calls, he may not actually bought the shares when it was less than $12. He probably just bought calls and exercised a bunch of them. It looks like he may have exercised 500 calls when it was $2.89 in the money. He probably had enough cash in his account to do that. The reason he may not have exercised all of the shares is because, he may not have exercised all of the calls because he probably didn't have enough collateral at that time to do that. Now, if that's what he's doing, why he hasn't exercised all of them at this point, I don't know. That is kind of a curiosity to me. It may be that he is planning to keep the 50,000 shares permanently, and that it may be that he gets a better transaction cost and more liquidity to sell the calls, just sell them back to the market at some point before April rather than exercise them. So let's go ahead and take a look at, I've got interactive brokers here in paper trading mode, and so we can look at options here. So I've got the options trader open here, and I went out to April of 2016 and I found the call, the $12 strike that he's been carrying. And many people probably haven't seen this before. So it's been quite a wild ride. I've got the GameStop shares open in a window right next to it. Let me kind of size these similar. And the bar size is the same, but the calendar doesn't necessarily line up. I'm showing 30-minute candles, but for the option, it's only showing trades that happened. And so sometimes when no trades happen, there's no candle. And it looks like it's keeping the bars tight, and so like if no trades happen, it may not show a gap, or maybe this is not showing outside trading hours, and this one is. In fact, that may be what accounts for it. It may be that I think I have pre-market and aftermarket showing on GME shares, but the option doesn't trade outside of the main market hours. So if I wanted to line those calendars up, that I could, but the point is you can kind of see the similar shape here. This option is so deep in the money that it's trading the option. It looks like at the close, it's trading right around probably where the shares traded at the close. He paid 20 cents for them, so I mean it's they're probably almost the exact same price. So let's look back at the history and look at, this will be kind of fun. Take a quick tour of Deep Fucking Value's ride through these options. It was pretty rocky in the beginning. I've already took a sneak peek of this, and I'll kind of try and describe it for people who are just listening. So let me scroll back here just to get the data loaded, because as I scroll, it loads more data. And you can see it's no longer showing a range of 300. And when you look at it like this, I mean, it's always been a wild ride. So one comment I'm going to add on this is Deep Fucking Value. It's in his name that he's a value investor. If you go look at his YouTube channel, it's Roaring Kitty. And I haven't looked at it that much, but he's a self-described value investor before he had made this fortune of I guess over $50 million, including the his sales proceeds of what he's already sold, um, from a very modest account in a short time. He was making videos before that, and he's describing being a value investor, and he talks about value investing not in the way that a lot of people think about it. From what I watched briefly on his channel, he talks about he talks about that value stocks actually move kind of fast, and he may have, I haven't read his analysis on GME, but he may have seen it as a value play. I could see that because they look for cigar butts or discarded businesses, and I don't know that the naked shorting was a factor in his analysis, or I don't know that the short percent of float was a factor in his analysis either on GameStop. That will be interesting to find out. I'm going to go back and look at those details because I think it's probably out there. I think he's published a lot of his research from back then. But the point I want to make here is he, like a lot of value investors, like Warren Buffett, is known for buying and holding. Well, he bought these options and he held them, right? So, I mean, that is a discipline that comes with value investing, much more so than swing trading. So as we scroll through this chart, you're going to, if you're like me, you're probably going to see a lot of opportunities to swing trade in and out. But as you know, when you're out and you're on the sidelines, it can be really hard to buy back in at higher prices. And so because he didn't do that and just held, and he happened to be in one of these rare perfect storms, these options, I mean, you can see here, they were 50 cents at the end of August. And so let me flip this to a weekly chart going next to, wow, I mean, that's, never mind on that idea. Let's maybe look at it daily and then scroll it backwards. Yeah, that's much better. So here we are looking at the stock, and I want to show you the cup and handle that I was talking about. You can see right there a nice cup and then a handle there, and this sort of like rising pressure that causes a breakout. And so this is the end of August, is this breakout. And so he was already in at that point because as I scroll through these options, you'll see that this price series is never below 50 cents. I'm not sure why it doesn't go back further. It may just be a limitation of the data, or maybe that's, what price is that? Yeah, that's 51 cents. So let's kind of scroll through here and watch this happen. And you can kind of put yourself in his shoes and imagine how much he's up right here in September. He's up tenfold on his options. And September, I mean, the stock had risen, I mean, it's a triple for him by that point. And I mean, I think a lot of people probably would have bailed by then or be trading around a core position, but I don't think he did that. And so you could see that these volatile swings are moving his option position up and down substantially. So in this short time period, it doubled. This is probably all within a single trading day. It went from 250 to over 550, and he didn't even sell. Let's look at when that was, October 8th. So we can see here, this is probably October 8th, this bar. Yep, that's October 8th. And then, it slams back down, and there's quite a bit of volatility here. And in fact, I think, it goes all the way back down to $3. I mean, that would be hard to watch. And as we keep playing it out, now this is where it gets exciting. The other thing I want to be calling out is the volume. as we're scrolling through this, here's a pretty big volume day that has 250 contracts. And these are trading at $5 at this point. So it's interesting that he had purchased 800 contracts, I think was his original purchase. And I don't see any single day looking backwards where there's that big. So I mean, he probably had most of the open interest when he bought these contracts. So that's kind of an interesting side note. So it really comes to life here in December and January. So yeah, look at this. This is just wild. So anyway, I don't know if people had looked at that yet. And because he bought the 12 strike and the share price was probably around $3.50 or $4 at that time, I'm going to guess that was the top end of the strikes. He probably bought as far out of the money as he could, and he probably gave himself about 9 months time. So anyway, that's what I wanted to talk about for GameStop. I think that pretty much covers most of it. Let me check my notes and see if I had anything else. No, we could talk about silver and VIX next, or we can end the broadcast. I mean, I don't know. Let's see if anyone's even watching. Okay, there's a few people watching. Oh yeah, okay. There's some chats. All right. Well, if anybody's watching, should we keep going or should we end it there? Maybe nobody's on the chat right now. Okay, yeah, let's cut it here, and I can do another broadcast at another time about some of these other topics. All right, well, thanks for watching.